So this is the weekly recap for week commencing the 26th of January. At the time of this recording, it's the 31st of January, so the week has played out. I've took one trade, one win, and that was on Euro USD shorts, as you can see on the screen. The week was kind of, choppy. It wasn't the best price action. My initial plan, which I'll walk you through, didn't quite play out, so I just didn't trade it. And instead I waited for a potential better trade idea, which again, I'll talk you through. So without any further ado, we'll go into the charts. All right, so here we are on DXY, which is the asset I do all of my analysis on. And for this week's plan, it was very simple. I wanted a mitigation of this daily fair value gap to basically sell off to take out this previous yearly low, okay, which is major liquidity. That was the plan that I wanted. I wanted that to be tapped into either on a Tuesday or Wednesday, ideally, but we didn't get that. And instead, as you can clearly see, price comes in on the Tuesday and completely takes out that liquidity, okay? So this is where I've got to kind of change my, plan, my initial plan. There's two situations that I was looking at. And the first one, once it took this previous liquidity, is that potentially price is going to react and push up and start targeting this daily fair value gap. Or you can see here on the 4 hour, we've got all these large 4 hour fair value gaps. We've got one here, we've got a very small one here, and also one up here as well. So it could come into here like this and sell off, right? Again, ideally trading with the bias. So we also had FOMC coming out this week, and we didn't kind of have any move other than this on the Tuesday that I could potentially get in, especially as Tuesday completely took out my initial targets. So we waited for Wednesday to play out, and FOMC was not, it wasn't massive with volume or volatility at all. But we did get a mitigation into this 4 hour fair value gap. You can see here that it's tapped into here and it started to sell off. Now, the reason I didn't take this trade was simply because at this time I'm in bed. I'm in bed at this time. You can see here, we start to see displacement. It's like 8 o'clock, 9 o'clock. I'm in bed by this point, wrapping up for the day. But when I woke up the next day, just going back to the 4 hour, I noticed that if I just play it forward, this is the Wednesday now, that this move here didn't create a new low, right? So my thinking, logically, is if this 4 hour fair value gap was the next move, well, it would have made a new low, and that didn't happen. Instead, it came down, it tapped into it, and then went straight back up, okay? That shows me that this 4 hour fair value gap really hasn't got the strength it wants, and also that DXY wants to go higher, okay? Remember, we don't trade DXY. This is where I do all my analysis. So I was waiting this point, and we're into Thursday now. So this was Wednesday, tapped into on Wednesday, came in, horrible price action. And this was FOMC on Wednesday as well. And then Thursday came in, and again, Thursday wasn't any better. However, it did present the opportunity for the actual trade. So this is where I start to look at this area and I go down to the 1 hour. And I've noticed that here, this is the Thursday, I noticed here that we've created a 1 hour, let's play this back, when price action started to push up, we created a 1 hour order block. So this was just a area that I was looking at, and this is where I started to frame a potential intraday trade, taking out this as a potential target, okay? And I'll show you what I did on the actual pair I do trade, which is the euro dollar. So I looked at this, and if I'm taking a trade off a 1 hour or 4 hour point of interest, I want to wait for 15-minute or 30-minute displacement. So price tapped into this like so, and you can see we displace, whoops, I'm on the wrong time frame. Let's go back to the 15-minute. You can see here that we do displace quite aggressively, right? Very aggressively on the 15-minute away from this order block, right? And my initial targets were actually this, okay? And I'll tell you why it turned into a swing trade in a second. The other confirmation, other than the displacement, is that we actually inversed this 15-minute fair value gap as well. So this here is a bearish 15-minute fair value gap, and we have displacement disrespecting this bearish one, creating a 15-minute inverse fair value gap. So this is my confirmation. This is where I initially got into the trade. So I'm just going to head over to EU right now. And this is basically it. Now this move happened very fast that I did not cover my stop loss at the high of the day, right? So for a high of the day, I'm looking for, protection at that area. That's my invalidation zone, right? So my stop loss realistically should have been here, but instead it moved so fast, putting in, MT5 and stuff like that. It's just, I just got it wrong a little bit. I'm human. So I got in here, not a bad entry, missed this initial move, but I got in eventually. And, I'm not going to lie, my emotions were a bit, not as good on this, and you'll see why. You can see that we have displaced quite aggressive, and you can see that my initial targets were here. So if we look at DXY, it's basically this target here. It's just the opposite. DXY is going up, so I want to be selling Euro and USD. And when price displaces, you can see what happens. So we've created 15-minute fair value gaps, and also we've created a large 30-minute fair value gap. What price does all the way up is it runs all the way up and completely disrespects all of these fair value gaps. It goes higher, and we've completely closed this fair value gap now. Now at this point, it's like 8:30 at night, 9 o'clock. We're going to let the day play out. When I was starting my trading journey as well, I would have came out if I saw this originally, right? I wouldn't have trusted my analysis. I would have tried to save a percentage off my prop firm, and basically I would have come out. But due to those mistakes I've made in the start of my journey, I now know better to not do that and actually just hold on, stop loss or win. So held on. And you can clearly see that literally the next daily candle that gets printed, price just displaces away, and there's a very nice surprise in the morning, seeing all this, come down. From here, it gave me extra confidence in the trade, so we created a 4-hour fair value gap, which has not been printed yet. Just here, 4-hour fair value gap, and then I think we created some 1 hour, a 1 hour one here as well. So it just gave me confidence in shorts. And at this point, my initial target was actually hit, okay? But I didn't come out. I believed that actually price is going to come to this level here, and this was the actual full trade. I'll just play this forward, and eventually it hits TP. So that is the trade I took on the euro dollar. It was on a 200k account. I risked 2%, and it was about like 10,000, which was pretty good. But that was the only trade I took for the week. Shorts on Euro, USD. And again, the whole point of this is that I had to adjust my approach, because my initial plan was a tap into this daily fair value gap on DXY to then come lower. But instead, it took previous yearly low, which is major liquidity. And, I had to kind of think on my feet. And actually, if you think about this, I caught a retracement trade, right? So this is retracing on DXY, and also this is retracing on the euro. The euro has been very, very bullish. You can see, we're making higher highs all the time. So this leg here was simply a retracement that I was able to catch. So hopefully this makes sense. Hopefully you've got value from this. This is my strategy in a nutshell. Very, very simple. And if you've got any questions, drop a comment in below in the chat. And also, if you have got value, give us a like as well. All right, so enough for me. I'll see you next week. And I'll see you all soon.